Welcome to the Double Blonde Brokers podcast. With this podcast, our hope is that clients and friends alike can learn something. With each episode, we make light of the complexity of health insurance by offering tips, tricks, vocab lessons, and even sharing stories of our experiences as brokers. New episodes launch every Wednesday.
Welcome to the Double Blonde Brokers podcast. I'm Suzanne O'Connor, and with me is Emily Keaton. And today we're going to review some of the under 65 health insurance. We've had quite a few episodes on Medicare and over 65. So we're quickly approaching the open enrollment time period. And so we'd like to give you a little information on that. A lot of you may know bits and pieces of it, but maybe this will further your information about it. So when is open enrollment? Open enrollment is officially from November 1st through December 15th. The start date for the plan, though, is January 1st, and that's for all 2025 ACA plans. So we love to have a lot of acronyms. So Emily's going to start off today and tell you, what does ACA stand for?
Yes, so ACA stands for the Affordable Care Act. It's got so many names now since it's been around since 2013, but it is also known as Health Insurance Marketplace, the Exchange, healthcare.gov, originally was called Obamacare. So these days we mostly just refer to it as the Affordable Care Act, as that applies to all types of different insurances. And basically what that means is that it meets what's considered to be minimal essential coverage requirements. Some of those requirements are things like covering wellness and preventative care, so you get those types of visits for free in your coverage. Other is that they cover pre-existing conditions, so can't discriminate for what your health is, and anything that you currently have going on or something from your past. Uh, they also have no limit to their benefits. So there is no maximum to your coverage. You know, they can't cut you off after $100,000. They have to continue to pay. These types of plans are offered by all kinds of different insurance companies. Just to name a few: United Healthcare, Anthem, Aetna, Cigna, available all over the country. And they are the ones who are providing these benefits to you. They are the ones that give you a network that you stay within on that insurance company, processing your claims, sending you those EOBs, and telling you what you owe on the back end. So that's just kind of the high level overview of ACA and insurance.
So who is it for? Who is ACA and open enrollment for? Well, basically, it's for anyone under the age of 65 that's not covered by group insurance from an employer, or it actually could be for people over 65 if they are not eligible for Medicare. There are some folks that have not been in the country long enough to contribute enough to their for Medicare, and so they are able to go on the ACA as well. So, Emily, we talked about in the beginning, we have a certain time period, right, for this to start on January 1st. So, tell us briefly, why do we have a set time for open enrollment? Why can't we just do this any time of the year?
Yeah, so a little history behind that is actually the insurance companies were the ones who said, we can't just let people enroll whenever the heck they want. You know, it would be like if you had car insurance, um, you know, drove on a road trip and had car insurance then you decided to cancel it when you got home, and then you add it again 5 weeks later when you take another road trip. Um, the insurance companies can't handle people jumping on and off. So it's important that people have coverage all the time. You know, your premiums are paying into that pool that these insurance companies have to pay claims. So if you're not paying those premiums all the time and then you want to jump on it because you got diagnosed with cancer, or jump on it because you want to go get your preventative care visit, it's really just not fair to the system. So um, we have this enrollment period that you can get on it, elect whatever you want, change your plan if you want to. And then outside of that, of course, there are times of the year that you can change or enroll as well. But you have to have what's called a qualifying life event for that. So some of these things are getting married, getting divorced, gaining a dependent, losing a dependent. Maybe they turn 26, go off to college or out of college, get a job of their own. Also, starting a new job gives you some of those special enrollment periods. So there are other times to enroll, but most importantly, right now we're talking about open enrollment and what that means for people.
Right. So we mentioned earlier about network. So when you go to the individual side of healthcare, that's where you're going to be really considering the networks much more seriously. The group market is a much broader, larger network. It's usually nationwide. It covers most. It's a higher tier. But on the individual side, that's when they are going to be more network specific. So that's why it's super important to make sure that the plan that you choose is going to cover the doctors that you want to use, right? So what does that really mean? Well, when you get in a network, they've already done all the negotiating for you, and they have taken those, whatever their normal typical charges are, and they've reduced them for you for the consumer, right? So it's not, when we say negotiated rates, some people go, well, do I have to negotiate my rate? No, it's already done for you. All the most important thing you have to do is stay in network. Because if you go out of network, you're not going to get that nice negotiated rate. I mean, that might take a $150 office visit down to 75 or whatever, you know? Now, so it also is super important when you're doing your wellness because they have that at they're going to cover that 100%. But if you're not in network, it's not going to work for, it's not going to cover it. So you want to make sure that you go in network for that. There are some plans that do have out of network benefits, but generally you're only going to get applied what you normally would have received had you have been in network. So there's going to be what they call balance billing. So in that case, I gave with $150 and they normally would pay 75. Well, you might go to another out of network doctor. The bill's 150 and you're still going to owe 75 even if they contributed to that same amount.
Right.
So the thing that's so also so important is they include copays, and copays are what helps make insurance more affordable for people. They don't seem to have this dread of going to the doctor because they have no idea what they're going to pay. They've got a set copay that you have determined, and that's all you're going to be required when you go in for that visit. Of course, unless you have other testing or things like that. Um, so you don't have to meet the deductible first when you have a copay. That gives you some peace of mind to be able to use that insurance. So Emily, we're gonna there. It's always people are a bit confused generally about really what is deductible, what is coinsurance, what's my max out of pocket. Yeah,
Hmm.
I've heard that once or twice, but I'm really not sure. And I look at my statement, I'm really not even sure what that means. So see if you
Yeah.
could help clear that up for them a little bit.
It's like we're speaking a different language sometimes. That's what we're saying. There's all these terms, and if you don't understand them, so many people get hit with a bill from a doctor and they just pay it because they don't have any clue what it means.
Mhm.
So some of this we hope can help people when they get a bill to identify what they really owe and how that works. So uh, one of the biggest most important vocab words is going to be deductible. So your deductible is the amount that your plan uh, sets by the insurance company that you would have to reach first in bills before your insurance company is going to kick in and pay a portion of your bills. So to give you an example, if you have a higher deductible of $5,000, and you get hit by a car and you have this massive bill, you will have to satisfy 5,000 first that you are paying before your insurance company kicks in and covers a portion or the rest of it for you. Some plans have high deductibles, some plans have lower deductibles. Really, that amount, if you have a lower one, just means you meet it faster. So, there is an exception to that rule, which is what Suzanne kind of just said. If there's co-pays on your plan, then typically you get to, for example, if you have a $20 copay to see the doctor, then it's only going to cost you $20. You don't have to reach that whole $5,000 deductible to see your doctor. So that's a huge plus. And then as well as the wellness preventative stuff, you get that that without reaching the deductible too. Um, After you reach that deductible, you go into what's called coinsurance. A lot of plans have 80/20 coinsurance, which means that now that you've satisfied that deductible, insurance company is actually going to pay 80% of your bill for you. You will pay the other 20%. Some of them have 70/30, so same thing there. Insurance pays 70%, you pay 30. Uh, you will continue that throughout the course of the year for any bills that you get until you reach your maximum out of pocket. That is a higher number than your deductible, typically. And once you reach that amount, your insurance company starts paying 100% of your bills. So that's kind of like your worst case catastrophic number. This is the most I'm going to pay in the year for any of my health insurance expenses. So um, things that add up to that deductible are things like if you get if you have a surgery, if you have diagnostic testing done, any types of lab work beyond that preventative visit. So as you go through the year, all these things are adding up that you do to reach that deductible and then reach your max out of pocket to eventually make it so that you are no longer paying.
Right, exactly. So you reach that, and then your plan will cover 100%. And as we said with the ACA plans, that's limitless, totally. And nowadays,
Yeah.
that can be in the millions. I hate to say, but that's the truth.
Yeah,
So,
and so to say one more thing about those networks that you said earlier, Suzanne, that's another reason why it's so important to stay in network is typically if you're out of network, that deductible and that max out of pocket is even higher for out
right.
of network
Oh, yeah,
services. So the more you stay in network, it's just going to be the most affordable way to do everything.
absolutely. Yeah, a lot of times it's doubled what the
Yes.
in network amounts would be.
So Suzanne and I just love talking about the under 65 market and tips and tricks on how to help you guys out with your health insurance. So we got a little bit chatty in this episode and made it a little bit long. We are actually going to divide it into two parts as we like to kind of keep our episodes between about 10 and 15 minutes so that you can listen to them quickly on the go. So this concludes the end of part one, and you can tune in next week on Wednesday for part two, where we will discuss further into high deductibles, health savings accounts, and how that could possibly help you. And then also into prescription drugs and different ways that you can save on those. So thanks so much for tuning in. We will see you next time.